The European currency managed to hold steady at the 1.0535 level yesterday, supported by statistics from the euro area. The Eurozone consumer confidence indicator remained stable at minus 13.7 points. Germany's annual inflation rate rose slightly while consumer prices fell on a monthly basis, which helped stabilize the market. The second half of the day was marked by muted trading activity due to the Thanksgiving holiday in the United States. Today, the euro and the British pound have every chance of extending their bullish corrections. In addition, Friday's data could contribute to their gains. Today's macroeconomic calendar is full of important news releases from the bloc's member states. These include German retail sales, whose rise could boost demand for the European currency. Traders may also take notice of data on inflation and GDP growth in France, as well as Germany's unemployment rate. Also, consumer inflation in the 20 nations sharing the European currency will be of particular interest to market participants. Eurozone inflation is expected to accelerate to 2.3% year-over-year in November, up from 2% in October. If consumer price growth exceeds analysts' forecast, it could prompt the European Central Bank to revise its plan. As expectations of rate cuts fade, the euro could gain upward momentum. As for U.S. statistics, the macroeconomic calendar is devoid of any major reports. What is more, today's trading session is shortened. Therefore, trading activity is expected to be subdued and characterized by low volatility. Speaking of the British pound, traders may pay attention to consumer credit and mortgage approvals data. Besides, Bank of England Governor Andrew Bailey is scheduled to speak today. If he takes a more hawkish stance on interest rates, the pound sterling is likely to gain value, extending its bullish correction against the US dollar. Now let's move on to technical analysis. The 1-hour EUR USD chart shows that the 1.0584 level acts as resistance. A rise above yesterday's high followed by a false breakout at 1.0584 will generate a sell signal, with the euro sliding to 0.533 where bulls are likely to regain control of the market. Overall, I expect the euro-dollar pair to trade in a sideways range today, bounded by the levels of 0.584 and 0.533. In case of muted buying activity at 1.0584, short positions may be delayed to 1.0620 on a false breakout, or 0.653 on a rebound in anticipation of 25-30p move. In a bear case scenario, if the price dips to the support level of 0.505, a false breakout at this level will make it possible to buy the pair. Going long on a rebound can be considered at 1.0477, expecting an intraday correction of 25-30 pips. Meanwhile, the British pound is heading towards the 1.2724 mark. A false breakout at this level will generate a sell signal and drag the pound-dollar pair down to 26.81. If the price breaks through and fixes below this mark, sterling is expected to dive to 26.44 and possibly 26.05. At this level, I recommend going long on a rebound to catch an intraday correction of 35-40 pips. Long positions at 26.44 and 26.81 can only be considered after a false breakout. In a bull case scenario, if the price breaks through and consolidates above 1.2724, driven by upbeat UK consumer credit data, the British pound could gain strong upside momentum, extending its correction against the greenback. Andrew Bailey's speech could support the upside, with the price rising to 27.64 and even 1.2796. At this level, it would be wise to go short on the rebound, expecting a 30-35p move. Going short at 27.64 and 27.24 will only be relevant in the event of a false breakout. Just a reminder that today is the final trading session of November. Be aware the strong price swings are possible. so please stay cautious. Best of luck to everyone. Enjoy your weekend.